Hey everyone, John Henry here, Slingshot Futures Trading Group, SSFTG. Today, if you couldn't tell by the chart layout, we're going to do another video going over candle-by-candle market psychology. And the whole goal of market psychology going candle by candle is to understand what the underlying mentality of the markets is at any given point in time. Are longs being satisfied and happy and doing really well, or are they underwater and scraping together a position to try to get out at break even? What all is going on? And one of the best ways to practice this information so that we can use it in the real-time application later on is to go candle by candle by candle to try to figure out what we think at the time is going on. So right out of the gates with bar 1, the first thing that we can see is that we have a huge gap to the downside. Now, the day before was a holiday, so this is Martin Luther King Jr. holiday. That whole day was off, which means that we're opening up with a gap, and this was Friday's price action. And we're still, even with Friday, opening with an outside gap down. Even with a huge rally up and still it doesn't matter, they're still gapping and opening outside of Friday's low and a huge gap down from Monday's low. And really, if we put a low on this and we see how the market responded initially right out of the gates, we can see that it was not shy. That first candle of the day was very, very aggressive. They did not hold back. When they came up, they hit Friday's low and immediately rejected back down again with a very heavy bear bar. Now, 1 out of 5 times, 20% of the time, the first candle of the day is going to be the high of day or low of day. It generally doesn't stick, and more often than not, if it does go a little bit further down, it will come back up a little bit later in the day, and that ends up not being the high or low of the day. It just kind of ends up being in the middle. So the likelihood that this actually does end up being the high or low of the day is only about 20%. But that said, with this big of a gap to the downside and this strong of a bear bar with that rejection off of the previous low of day, it's hard to not believe that the sellers will have at least a little bit more follow through. Chances are sellers will be selling underneath this candle to try to get it to go a little bit further down and see if they can get those scalp side objectives. We did have a continuation phase. If the sellers sold underneath the bear bar, their scalp objective was hit, and it was very obvious in terms of the response there. They weren't shy about that response. So we know that if there were any traders who were, in long on the rally on Friday, they effectively opened up and gave up everything on the open and started off with a very strong bear kick. Now, bar 2 is a bear bar. We do have some nice follow through, and yes, they did get some scalp targets. But it's like a middle ground candle. It's not really proving a whole lot. It's closing basically in the middle. It's not a bottom third like this one was. It's got some issues. And that doesn't necessarily mean that the market has to stop going down. It will very likely keep going down. But what that does mean is that sellers aren't going to be as fast to sell here. They would rather get better prices. This is kind of a weak bear bar, so why not try to find a better location for a sell? A lot of traders will be utilizing the top of bar 1 as a stop location, so logical downside objectives, even for a 1-to-1, are basically just back down to the low. We do have a rejection back up through the highs. The sellers find resistance above that previous bear bar top, and they push back down and bounce off of all of those objectives once again. Even this bull bar in and of itself, if it were to have gone down and then all the way back up again, we have a very nice rejection and just a terrible looking bull bar here, suggesting that the buyers don't really have anything going on. Sellers might not be the happiest people in the world because that was a pretty bad rejection, and if they shorted bar 1, they're underwater. But realistically, well, chances are sellers are still in control. This is the first bull bar that the buyers have. Not exactly the strongest thing in the world. Sellers will be looking to sell off of this bull bar if they haven't already sold in the inside move, with the downside objective of just back down to the lows. Could be back down to the low closes, back down to the lows of the bear bar, low of the bull bar. Either way, back down towards the lower portions here are going to be the objectives for the shorts. We get a very nice turn back down again and a beautiful bear bar. If the sellers are going to be taking this further down with some aggression, we should see some good follow through. The bulls just failed out of the top. We've got a fantastic inside bear bar, predominantly closing on its lows, in the bottom third area at least, so it's very likely that sellers begin selling underneath this for a continuation back down again. So we can bracket this candle here and see what they want to do for the downside. We do get a little bit of continuation, but not exactly the best continuation in the world. Kind of a crap candle, honestly. That's not really going to pump anybody up. The shorts aren't going to be super intrigued by that one. That's not going to make them too happy. And realistically, that's, well, not the best bull bar in the world either. So buyers might not necessarily want to show up above the highs either. We've got a little bit of back and forth. If the sellers did sell underneath that bear bar, so far they are not feeling very good, but it could still just be a small pause before a continuation. We've got to give it more time. That definitely doesn't help. That is a really, really bad rejection, and it's a bull engulfing candle, engulfing a previous bull bar. So now we have this bear bar down, failed to go anywhere, and then reversed back up again, kind of shutting the whole thing down. If the sellers are in, and they're in from underneath that bear bar, well, it's starting to look like they're hitting the exits a little bit. If we see more responsiveness here, then chances are the shorts are giving up on the downside, and we should expect to see a larger corrective phase in the other direction. And there again, we have a very, very weak bear bar closing directly off of, not somewhere random, but where the sellers entered in short. And not just where the sellers entered in short, but to the tick where they entered in short, which suggests that they may or may not have been filled on their exits. Remember, we're talking the S&P here. It's got to trade through your contract half the time, more often than not, to actually get a fill. Chances are, if they shorted underneath that bear bar, they didn't get a fill if they were trying to get out of break even. And that adds a lot of excess stress to the shorts if they can't get continuation. And with this weak of a bear bar, what do you want to bet that their stops, wherever they were initially, just move down to above that bear bar? They're not going to want to keep that risk going. And there's the stop run while all of them get taken out. If we look at this bull rally up, we can very obviously see that, first off, the shorts did not get their targets down. And second of all, if they were short, they had a chance to get out of break even. That doesn't necessarily mean that it's going to go screaming all the way to the highs, but if it does come back, this is going to be a zone of support for a while. This is where all of those break-evens of the sellers who got stuck are going to be looking to get out. This big giant bull bar back to the upside is kind of covering a lot of ground, and if sellers were looking for a good price to get in, they finally recouped some of that previous wick. This is the zone more than anywhere else where sellers could try to come in with a risk favorably above the high of bar 1, and a rotation back down. Remember, there's only about a 20% likelihood that they stick the landing here, so the success rate on this is going to be low. They've got to go for big targets. So they have to make sure that a 2-to-1 or a 3-to-1 fits. And if we look at where this is, if they were to enter directly on top of where this bull bar is, a 2-to-1 fits inside the lows. That's a perfect spot, and if they really want to make it better, they'll try to get a better entry point a little bit further up so that they can get a 2-to-1 that fits down to the low closes. We know there's a lot of support down here. Why fight against it? Get our target on the inside of it. So if we can go just a little bit further to above that bull bar's high, that's where the shorts will be trying to get things going to the downside. If bulls are coming in, well, they don't really have a whole lot going for them yet. If they come in way up here, they've got resistance just above them, and they're in the heart of previous resistance as it is. This is not an easy spot for bulls to come in. And as expected, we see the sellers push right back down again. Now, it's not that the bulls can't get things going here, but it makes more sense that they try to buy a little bit of an inside pullback or buy a bit of a cheaper price. I know this is a really, really strong bull bar, but the problem isn't the candle, the problem is the location. Buying way up here is incredibly challenging to get anything other than a scalp, and even then, if you're lucky. But if buyers can get a little bit of an inside pullback, now we've got something to work with. We have a very strong bear bar, so chances are sellers will get another drive down, and we know where they're probably going to go. They're probably going to go down to this pocket of wicks in zone of support down here, where the buyers will likely, hopefully, try to defend and push back up and see if they can break above a new high. Or, if the bears can break down, they're going to have to crack this level and take it lower. We've got more bearish continuation, and this adds to the resistance up here, this big old wick to the downside. I wouldn't want to sell way the heck down here. There's not enough room. But it is obvious that sellers are selling the retrace back into resistance. They're not interested in selling down here, or we would have a bigger candle. But they are obviously interested in selling the retrace. That's why there's a giant wick there. So if it can come back into this area, this seems like a logical point where sellers are trying to get their entries in and reject back out of. We have a strong bull bar back up, but I mean, it's directly into the level of resistance. What a horrible spot to want to go long. If anything, this is a possible opportunity where shorts can look at this and say, hey, you know what? This is a really nice bull bar, but it's in a really bad spot. Sellers can use that as an opportunity to try to pressure back down. If bulls are going to be taking this to the upside, we have to be looking at it from a realistic standpoint. Their targets are basically going to be above the high in every regard. It's going to be a low probability scenario, and this is not a good entry point for a low probability. That would put a target in the middle of nowhere. It just doesn't really fit here. So longs, although they may have a case, they don't really have a case here. It just doesn't fit. So it makes a lot more sense that sellers re-up off of this area and try to pressure their way back down again. We get a strong bull bar into the zone, but it's only creeping into the area. It hasn't broken above, it hasn't shown rejection, it hasn't shown that the sellers have failed here. A strong bull bar certainly doesn't help the sellers, it's not going to give them the warm fuzzies, but it's also not, because of where it closed, going to make them jump ship and exit immediately either. With that in mind, we're kind of in a holding pattern where if we get another strong bull bar, we may have to jump ship, otherwise we'll have to wait and see what they want to do here. The bulls do not trigger long, and we have a very strong bear rejection back out. Similar to a twin reversal where they went up and then whoop, immediately rejected right back down again, causing all of those problems. If there were bulls who bought above that bull bar, we can now very obviously see they got a bit screwed, and chances are they would love to get out if it can retest that area once again. We have a bear bar continuation back down again, down to the area where, hey, who would have thought, exactly where the market was anticipated to go. Again, we haven't broken a new low, we haven't broken a new high, but we do have a giant gap to the downside. It does appear as though, at the very least, maybe we're trying to go for a measured move. Not the biggest measured move in the world, it would just be a new low, but at least it gives us something to gun for. Strong bull bar back up. This is a little bit of a challenge. Beautiful area of support, horrible spot to be a buyer. Once again, buying directly into now proven resistance. Talk about shooting yourself in the foot. Even if it doesn't work, you're reinforcing bad habits. These are the types of things that are going to get you into trouble, if not this time, probably next time. This is a very challenging long. It's a beautiful looking long candle. It's a beautiful bull bar. But when we look at it contextually, there's too much resistance. This is a bad spot for buyers to be coming in. If sellers are taking the aggressive stance, then their stops are still above the highs. That hasn't changed. And at least this offers them up the ability to sell with a smaller stop and targets inside of the lows. And we can measure up exactly where that would be. If they want their stop above the highs and they want to target down to the lows, that means that the entry point for them is going to be hovering right around the 99.75. So that's going to be a zone of interest for the market to try to pressure back down from if it's able to get there. Now, on the further area, if they want to try to get it to at least fit their 2-to-1 inside the low, at the earliest, we would expect to see some resistance about there. Now, will it make it up that far? I don't know. I know a lot of sellers would love to see that, though, so that's going to be a zone of interest. We do know that this is an area of resistance either way, so we want to see how the market responds. We go into the very next candle, very nice bear rejection back down, but unfortunate because it didn't go far enough. Sellers want the resistance zone up here. They were not given that resistance zone, and now we have a beautiful looking bear bar selling basically into support. It's too far down. This is an incredibly challenging location. We do know that the bulls had a terrible spot, but the sellers, they're not going to have a very easy time getting this going. We need more proof if the sellers are going to take this. Oh, man. Well, it kind of helps. I mean, they closed underneath the low by just a little bit. It's a beautiful bear bar follow through. It closed on its low, so that certainly helps. If the sellers are going to take this back lower, then chances are they're going to want to re-up and retest. The longs who got in have been dunked, and if we look at where the market came back to, to the tick, they were given a chance to get out at break even. Now, we possibly at least have another situation where longs got trapped above that last bull bar. So if we're looking for a short area of interest, that's the spot that we want to try to pressure back from. That's all the longs getting out and trying to get a continuation back to the downside, possibly repositioning out of the longs and even going short. We've got a weak doji bear bar at the lows. That really tells us and kind of solidifies our fears. Sellers don't want to sell way the heck down here. There's too much support. They're looking for a better price. It's also getting a little bit later in the morning session, going into 11 o'clock now, so a better price is starting to look pretty good. See if they can get a lift back up. We've got bull bars coming back off, blow off through the low, but unable to close underneath the lows. And then they start rejecting back up again. It's just looking like all they were able to do was go down, get some of the measured move objectives, and now we're going sideways again. A lot of the sellers are waiting for better prices. They want an entry that's up here that fits. We've just broken a new low. We've got a bull bar back up. We're following it up with another halfway decent bull bar. Chances are the bears are still in control, right? If we're looking at this overall structuring to the downside, we've got a nice bear channel. Sellers will be looking for a better price. Inside bear bar directly into the bottom is going to be a challenging spot to try to get things going, but out of all the other locations, this nice little tight channel working its way lower at least gives them a smaller risk parameter to work with if they're trying to get it to go lower. We do have a continuation that triggers the shorts underneath the bear bar as we go into 11:30. And we have the final blow off down to the new channel lows. We still haven't necessarily satisfied any of the sellers back here, but if the market were to ever come back into that area, it would be a zone of interest. They are going into lunchtime though. Oh, okay, well there you go, all the way back up again. And here I am thinking, oh yeah, we're going into lunchtime, we're probably not going to hit it. Sure enough, it did go all the way back up, rejected off of it almost to the tick, and cycled back down to a new low. Crazy how it all works out sometimes. That's going to do it for this one, though. Hopefully it helps you kind of understand why I look at the candle-by-candle psychology, because it's such an important aspect in terms of how we trade and understanding what the market's doing, but more importantly, why it's doing what it's doing. That way we can respond with as much information as possible. If you want to join us while we're trading the markets live and during the U.S. morning session from 9 until around 11:30 or 12 o'clock, feel free to register for a free trial on the main page of SSFTG. Not only are you able to get a full week for free in the live trade room with the rest of the VIPs, but you also get our 24-page guide on risk reward and the ability to schedule a 30-minute call to get any of your questions taken care of with me. So make sure to register soon so that you get on the calendar as quickly as possible before all of those time slots fill up. That's going to do it for this one. I hope the video finds you well, and hopefully it helps you understand as to why I put so much emphasis on the candle-by-candle analysis. Of course, if you have any questions, feel free to shoot me an email, jhb@ssftg.com. Until the next one, we'll see you all then. Thanks. Bye.